Hello and welcome to Pro Trader Strategies Market Commentary for Friday, May the 18th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. Please read over this disclaimer, as I'm not going to cover everything. I'll just kind of breeze over it, but we're here to teach you some different things, but take that into your own lives and into your portfolios in your own way, because I can't give you advice on what to trade exactly. I can only tell you what I'm doing, and it's for you to take that into your lives and implement it in your own way. Please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Well, that's saying if we had any. We don't have any economic data really to talk about. We got some Canadian stuff, but it's not really that important. So let's move on. On to the overall markets. We've got crude oil, pretty quiet today, down a dime, really unchanged for all intents purposes. But really interesting, it's really traveling along this original support level, acting kind of like support again. You know, I redrew it a little wider and made that the center is what really ended up happening with this whole move. And now, interesting enough, it's right back there on that trend line. So crude oil continues to move higher slightly, ever so slightly, it seems like. They're calling for higher crude oil. I think it's due for a rollover and, at least maybe a retest, let's call it, of the 38 Fibonacci or something like that, or a retest of this trend line in the 50 days, something like that. We need a little bit of a rollover, maybe come down and retest this high, something like that. Something needs to move lower here, I feel like. All right, getting a little long-winded today. Gold seems like they're trying to build a little bit of a bottom here. You know, yesterday's doji, these last two, and if we get another one like that, this starting to look like it could be a bottom. We're still waiting for confirmation, but I was expecting it to come down, maybe even test and go below, but it looks like it's being held up here. So just beware if you've shorted this, that this could be a little move to the top, all right? Could be like a dead cat bounce, and then that's when we get that break too. But just be weary of this creating a little low there or a short-term bottom anyway. Bitcoin, really is unchanged as well. It's right here at the point of control where the most volume's been spent. This is where people have found value. Now, I've been talking about it wanting to come down and test this 5880. I'm still in that camp that I think that if you're really bullish on Bitcoin, you would like to see that type of technical setup, because that would be really the catalyst to cause this to have a long, sustainable rally as far as I'm concerned. It would really build a lot of confidence anyway. Bonds, after, the big moves that we've had in bonds, they're finding a little bit of a bottom here. We are seeing some good economic data, but I don't think it's enough to really get the Fed to maybe increase 3 times this year. They might still stick with 2, and I think that that's getting a little ahead of themselves. I think they need to let it breathe a little bit. I've talked about the mortgages and everything else and the interest rates that people are going to incur. That's going to crimp spending in an economy that's not even really robust. So a robust economy is where I think we would start wanting to do that. We're trying to crimp the spending of the consumer a little bit early, I think. So I think they're getting a little ahead of themselves with their investment mandate rather than their economic mandate at this point. The VIX, unchanged for all intents and purposes. Well, we're just not seeing a whole lot of volume or anything going on. A lot of that has to do with we haven't gotten really good economic data this week. It's been really quiet, as you can see, with the Dow Jones Industrial Average really settling down here in a trend. Great time to put on those short butterflies I've been talking about. So I hope you guys have been watching those daily market commentaries, the webinars on the short put butterfly, because this is actually a good time to put something like that on. When you start getting that rubber band winding up, that's when you usually have a move happening rather quickly. So, check that webinar out because it's a really good one. Nasdaq, again, 4 points on the day. E-mini S&Ps unchanged on the day, and it's not quite an inside day, but it sure feels like the whole week has been an inside day. We just really haven't gone anywhere outside of a tight range that, and very low volume numbers. As you can see here, the volume numbers are just lethargic. Anyway, on to things that I've done. Having said that, yesterday was the webinar. We're doing those on Thursdays, the webinars, so make sure you change your calendar for that. And I talked about the short put butterfly. This I set up, similar situation where I talked about that, where it trades sideways a little bit. That builds up energy, and I can't remember if it's called kinetic energy or whatever. But anyway, that energy being built up makes it want to snap in one direction or the other. So that's what I'm looking for in IBM. So I went in the June and did the 135, 145. Actually, I did the 135, 145, 155 put butterfly. And I collected a credit of $6.23. I did that in both my margin account and in my IRA. So it is IRA appropriate. So I'm looking to get out of that 25% of max profit. So I draw down 25% on that trade. I'd be looking to get out somewhere around $4.50, let's call it. That's just doing the math really quickly in my head. So I'd have to go dig through my notes to see where I wrote down the exact number. I don't remember it right offhand. So that being said, looking to do that here in IBM, it could be done in something like what we saw with the E-mini S&Ps, the SPY, the SPX. So check out that webinar if that's appropriate for you. Check it out. Watch over that. Let me know what you're talking about or what you're seeing there, what you like or dislike about this video and that one as well. If you give me a dislike, though, let me know what I was doing wrong, all right? So that's all I got for you guys today. Have a great weekend. And if you can't take that, take it easy.